Last Tuesday, we talked about there's still plenty of the selling right at this access zone. This is where the original selling started. That's also classified as the change of character bar with the spike of the supply. Subsequently, we have plenty of the testing, another reaction, and even though we have a strong rally up to this axis line, but there is selling happen. For example, this bar comes with spike of the supply, and also this bar comes with consistent high supply level, and also this bar. That's the reflection of the consistent of selling right at the axis zone. However, something has changed recently. This is the first bar that committed above the resistance line. On Thursday, 13th of February, that's the first bar that shows commitment. This bar, or even this bar. There's few attempt to rally but show rejection. This is a straight gap down bar. This is the first bar that shows commitment above this resistance line, 61.20. Did it attract excessive supply? On Friday, this is the bar, a doji. It doesn't attract a lot of the supply. That's a good thing, very encouraging. The first segment comes with a lot of the volatility and also very choppy, high supply level, impulsive, big spread, bearish bar. Here is the second segment, comes with different texture. Compared to the first segment, this is lesser volatility. Can consider this as a contraction of the volatility. There's different texture and also different types of the volatility. This is the bar that shows some change. On Thursday, that's the first time that it committed above the 61.20 resistance line. There isn't any follow through to the downside or attract a lot of the excessive supply next day. This is a doji, comes with lower supply, suggests continuation to the upside. However, we are still not out of woods yet. I don't want to rule out we won't attract excessive supply right at the top, because when it penetrates the swing high level, some would sell into strength. We need to pay attention to whether we'll have increasing of the supply level, or it can have another rally to go up and to settle down later. This is still very bullish and very encouraging. I don't see any threatening price action yet. That's the contraction of the volatility after the breakout from this segment 2. I don't see attraction of the excessive supply. On Friday, there's a doji bar, and as of now, it could have another attempt to go up to challenge a all-time high level. It's important to monitor whether we'll get excessive supply right at the top. It's normal to see increasing of the supply when it tested the all-time high level, because some traders, investors will sell into strength. The short-term movement is to go up to have another attempt to challenge the all-time high level, and then we'll need to check and to monitor whether we'll have consistent high supply level or spike of the supply level. In terms of the medium term, there's still a trading range. The trading range between 58.50 to 70, there's a trading range. Another slightly choppy scenario would be to have an uptrust, attempt to go up and then failure, attract some supply and then come back in to chop around, and we have low supply level. This is still very encouraging and direction is up. Long term is up. Medium term, I would consider this as a trading range, but immediate term have another attempt to go up, challenge your all-time high level. But most importantly, unless you are trading the S&P 500 ETFs, the SPY or the leverage ETF, or even the E-mini futures, we should pay attention to the setup of the individual stocks, because what we want to participate is the stocks that shows outperformance, that have a lot of the relative strength. Sometimes, even though we could have a pullback in the indices, but some of the outperforming stocks will hold up the gain or even buck the trend to go up. Picking the right stocks that shows outperformance is very important because those are the leaders that will outperform and to beat the index by many times.